Greetings. Welcome to Khan's Econ Nugget channel. In this brief video tutorial, I would like to share with you a scenario, a hypothetical scenario, in which we explain how the accounting profit and economic profit calculations work. So here is the scenario. So let's read along. Fred currently works for a corporate law firm. He's considering maybe he should give up his job and start his own legal practice. So in his legal practice, he expects that he will earn $200,000 a year, and in order to run his legal practice, he would need an office space, right, and a legal clerk and a law clerk. So he has found the perfect office space that will cost him $50,000 per year, and he also found a very, you know, very collegial and well-prepared legal clerk who will provide his service at $35,000 per year, maybe a part-time paralegal, right? So now we have to calculate what would be the Fred's legal practice profit situation, both in terms of accounting profit and then in terms of economic profit. So let's recall that accounting profit calculation formula is total revenue that he expects to earn $200,000, that's his total revenue, minus total explicit cost. Explicit costs are the kind of costs that are well documented and they have receipt for them, right? They're well documented expenditures that has receipt. So let's see. So if Fred rents that space, that will have a receipt, right? Rental payment receipt. So that expenditure will be $50,000. That's explicit because it has a receipt. And then his legal clerk, the part-time legal clerk salary will be $35,000. That will have a receipt, a payment receipt of wages and salaries payment. So together it will be $85,000 of explicit cost for Fred, and his total revenue would be 200,000, right? So 200,000 minus 85,000, his accounting profit will be the $150,000. Now let's also calculate his uh, economic profit. The economic profit calculation formula is from total revenue, we would not only subtract the explicit cost, but we also will have to subtract implicit cost to get to the economic profit. In other words, economic profit is calculated by subtracting one more item from accounting profit, and that one more item is total implicit cost. Now what is implicit cost? Implicit costs are the kind of costs that are like opportunity cost, meaning they may not have a receipt, they may not have explicit expenditure receipt, but on a hindsight, a person can calculate that, oh, that was my opportunity cost. I missed an opportunity, and that is that imputed costs, right? So here is an example of implicit cost for that person. So here you see $125,000 is an implicit cost because in his current job, right? So the Fred's current job that he has to quit, that he was earning $125,000. So now he will not be able to earn that anymore. When he's running his own law firm, he has to give up on his salaried job. So that becomes his opportunity cost. He'll be missing out on that salary income. So it doesn't have a receipt anymore, but he knows that that's what his income would have been, right, had he not been owning his law firm. So in addition to explicit cost of 85,000, we have also now we are now subtracting the $125,000 of his salary that he would be foregoing. So that's his implicit cost. So explicit cost 85,000 and implicit cost 125,000. So together, when subtracted from his expected total revenue of 200,000, he's $10,000 short. So he will have a negative economic profit of $10,000. So now it's up to Fred to decide should Fred continue with his current job that gives him $125,000 a year, or should he take up on his full-time entrepreneurial venture as the owner of this law firm, where he will be earning $115,000 accounting profit, but in the economic profit will be $10,000 less, right? So it's up to Fred now what to do, right? So here what we are saying is that now if we tweak those numbers one more time, can we calculate, redo them, right? So now we are saying, let's redo the accounting profit and economic profit numbers. Now consider that his rental cost is not 50,000 anymore, it is 65,000, right? And then we're saying, let's also consider that the paralegal, the legal assistance uh, payment is now, payment remains to be unchanged. Let's say the part-time legal assistant continue to earn $35,000. And then what happens here? If we redo those numbers, right? Now it becomes 100,000, right? 65K, I'm sorry, 65K and 35K is 100, right? So the explicit cost is now 100K. So then what happens? So 200,000 minus 100,000, right? 200,000 minus 100,000. Now it will be 200,000 minus 100,000 will give us 100,000, right? So his new accounting profit will be 100,000, right? It will be two zeros here, 100,000, right? And what will be his new economic profit? So we got his current salary, instead of 125,000, we are saying now, let's say his salary is 130,000. So now you have to subtract 100K and 130K from 200K, right? So from 200K, now you have to subtract not only the explicit explicit cost of 100K, but also you have to subtract the new implicit cost of 130K, right? So these numbers are gone now. New explicit is $100,000 and new implicit cost is $130. They have to give up his job, the 130K. So you have to count for that as an implicit cost as well. So that gives us his new economic profit will be now 200K minus 230K. So it would be negative $30,000 would be his economic profit, right? So you can wonder that why always, accounting profit is bigger than economic profit. But that is visually very obvious when we see the graph, right? Or the textbook chapter for this business costs chapter of the textbook shows that why accounting profit, in this case the gray rectangle, gray box, is bigger than this kind of beige color or light yellow color economic profit box is smaller. Because from total revenue, which is of same height in both cases, right? Total revenue was 200K in both scenarios, in both accounting profit and economic profit scenarios. The height of these was same, but the explicit cost amount is same in both the formulas. As you see, explicit cost enters into both kind of profit formulas in same way, but for the economic profit calculation we subtract one more thing, right? That's called implicit cost. So this green part is another subtraction from total revenue to get to economic profit, whereas in the accounting profit calculation we have to only subtract one item. So because we are subtracting more kinds of costs from total revenue in economic profit than in accounting profit, therefore economic profit box looks shorter, right? This one is shorter than this one. So economic profit is shorter or smaller than accounting profit, due to the fact that here economist cares about both kinds of costs, explicit and implicit, whereas the accounting profit calculation formula suggests accounting profit only cares about explicit cost, right? Therefore EP will typically be less than or smaller than accounting profit, right? AP being economic profit and AP being accounting profit. So please drop me a line if you have any questions in this regard, and I'll be happy to respond to you. Thank you so much.